So my name is Wong. I'm the COO and a founder of Borrowell, which is a marketplace lending platform, which I'll tell you about because most people, when I say marketplace lending platform, are like, I know what each of those words is individually, but I have no idea what you mean when you put them all together. And so what I thought I would do is tell you a little bit about the Borrowell story, which links into the founder's story. We've got a couple other team members here tonight as well, and then give a piece of advice. But actually, I'll just give the piece of advice now for those, was it 80 or 90% of YouTube video watchers that don't get past the first minute. So the piece of advice that I would give is if you want to pursue your dreams, live below your means. And I didn't mean for it to rhyme. I know that's really cheesy. I wrote it on the streetcar this morning, and it just happened to come out that way. But it'll all link in. So first of all, I'll tell you a little bit about Borrowell. As I mentioned before, it's a marketplace lending platform. And the problem that we're trying to solve is that if you give your money to a financial institution, they'll probably give you 1% interest if you're lucky. If you then turn around and want to borrow money from that same financial institution in sort of a relatively easy way that doesn't involve you going into some sort of branch, you'll likely pay 20% interest. And so that spread between 1% interest and 20% interest is pretty big, and we feel like there are some inefficiencies in there that we could solve for. And in the same way that marketplaces have really helped solve for inefficiencies in a lot of other markets, we've heard about some already tonight, but Expedia for travel and eBay for goods, we feel like that really hasn't happened for financial services. And so what we're doing is building an online marketplace platform for lending. So essentially on one side of the marketplace, connecting institutional investors who are looking for better returns on their money, and on the other side, borrowers who are looking for a simple, secure, and convenient way to access credit. So that's pretty much what we're about. So we announced a seed funding round last month, which was really exciting, as well as commitments of loan capital. So we've had a mid-sized bank and sort of a family trust put money into both our business and commit to loan capital as well that we'd be lending out, which was super exciting. But obviously before the exciting news of being able to put out a press release, which we did do, and announce the funding, we were bootstrapped. And the founding team and Andrew, our first employee over here, our CTO, Salim Naran, is here as well. You can wave. They're the two 6'3" guys that, if they were standing up, you would notice. And so I feel like the reason that we were able to even pursue this is because we were able to take either no salary or a small salary for those few months. And so that's sort of part of the advice of if you want to pursue a dream, then you have to be able to live sort of below your means and not be used to this sort of high fixed costs sort of lifestyle that you've built up for yourself that you can't afford to take your dream job, which we've heard a little bit about, because you've got this huge mortgage to pay for, or you've got your kids in really expensive schools or whatever it is. Not that any of those are bad things, but I think just living below your means and being able to adjust your lifestyle or not have to adjust your lifestyle just allows you to do whatever you want, whether it is found a startup, join a startup, travel for an extended period of time, whatever that is. And so obviously Canadians aren't doing this. I mean, if you've read anything about Canadians and debt levels, everyone knows that they're really high. So I thought I would do a little bit of a pop quiz and ask how much credit card debt do you think Canadians are carrying today? And I'll give you 3 numbers. I'll tell you what they are now, and then you can vote. So the first one's $1 billion. The second is $75 billion. And the third one is $500 billion. Okay, so in terms of total credit card debt that Canadians carry today, who thinks it's $1 billion? No one. Okay, clearly I picked too low. Okay, $75 billion. Who thinks? So maybe, I don't know, a quarter? Okay, but who thinks $500 billion? Okay, more people. So it is actually $75 billion of credit card debt, but $500 billion is the amount of non-mortgage consumer credit that Canadians carry. So, I mean, it's not this crazy number. When I first started here, I felt a little bit like Dr. Evil, where, it was like, I would say $500 million, and they're like, no, it's 500 billion. I was like, oh, right, it's like a billion, not a million. So, so it's incredible, right? Like, it's these huge amounts of debt. And I feel like, carrying credit card debt is one of those things that people don't talk about, but everyone does. It's sort of like eating at Taco Bell. Like, no one's proud of it, but everyone does it. And so it's true, right? And I think up until now, that's been really, it's been fine, because you haven't had a convenient option if you want access to credit. Until Borrowell comes along. And for us, I think now what we're trying to offer Canadians is a chance to, get a hold of your finances so that people can pursue their dreams. And that's, the simple, secure way of accessing consumer credit that's actually with a rate that is customized for you. So, one of the things we'll say is that if you are a great driver, you get a better rate on car insurance. And right now, that's not really the case with convenient forms of credit. So for us, if you've got better credit, then you'll get a better rate. And that's sort of who we are. If you are interested in finding out more about us, we're planning on launching in a couple months later this quarter. We'd love for you to sign up on our website for updates. It's borrowell.com, 2 R's, 1 W, 2 L's. Or you can follow us on Twitter at myborrowell. So thanks very much to the Toronto Tech Meetup. Happy to take questions. Yes? What do customers pay to borrow? So again, it depends on their credit rate. But the range that we're looking at right now is sort of in the 7% and up range, whereas typical credit cards are 20, sometimes even 30%. Yeah, so that's actually a good distinction because there are lots of online access to credit, but there are sort of more, online payday lenders where you'd be paying, 50%, 100%, 300% interest. And so our aim is actually to be lower than credit card rates, not higher. Any other questions? Yeah, Alex.
How do you live below your ability? Do you have to cut anything out?
How do you get to live below your means? What I do personally? Well, it was fairly easy for me because I was on mat leave before, so I was sort of already sort of living below my means. But I do think that it's really important. I think the choices that you make on a daily basis, for a long time we didn't have a car. We choose to live in the city, but, I think we don't eat out a lot. We sort of like to cook. So I think there's lots of individual things that you can do to cut back. And actually, I don't think it's a sacrifice. I think, there's lots of great things about living more simply. And that's a whole other talk, I feel like, about minimalism and simple living that, happy to talk about. Yeah. Where does the money come from and that we're lending out? Yeah, so initially it's going to come from a couple of institutional investors. We've got great partners in Equitable Bank and Oak West initially to start with, but there's lots of other institutional players that are interested in investing in the space all over the world. We've got lots of US hedge funds that are interested in talking to us. But eventually we'd love to be able to have individuals as well put money on their platform. Right now regulations don't allow for it, but around the world it's both been institutions and individuals putting money on the platform to be loaned out. Yeah.
Is a lot of your financing, is it unsecured or is it secured against property, car?
Great question. Yeah, so the question was whether our financing is secured or unsecured. So, do you have to have a house or a car to put against it? It's all unsecured, 100% unsecured. At some point we might do secured, but it's a completely different sort of process for assessing risk levels. Yes? The question was about small business. So at this point, we would extend to individuals who could use the loans for small business. Actually, people can use the loans for whatever they want to, as long as they qualify for them. But we won't be assessing the sort of small business themselves. Again, if future revenue stream, future project for us. Yeah. What's the range of the loans we offer in terms of the amounts? It'll probably be between $1,000 and $35,000 to start. We might cap it a little bit, but the goal is to offer up to $35,000. Sorry, I feel like I'm ignoring this side of the podium. So yeah.
How fast can you give money?
How fast can we give money? Those are things that we're working on right now, but we are hoping for it. So the approval process is instantaneous. So in terms of you apply online, we say yes or no, and then if yes, this is the amount and this is the rate that we would give. And then there's a couple of different verification steps that we have to do as well, verifying your bank account is yours. And so there's a bank ping that we would do that you'd have to go in and verify. But if you do that sort of all right away, I don't want to give commitments now before we give it, but it's a matter of days. It's not like weeks and weeks. In the very back.
Have you done anything special to streamline your credit analysis process?
I'm sorry?
Have you done anything special to streamline your credit analysis process to make it faster than the current process that banks use?
Yeah, so the question is, are we doing anything that's sort of faster or more efficient than the current process is used for bank. I mean, it's instantaneous, so it's all through APIs in terms of, we have our own proprietary credit underwriting methodology, and we're going out and we're doing a bunch of, there's fraud checks that we're doing, there's device checks, there's a number of things that we're doing just to make sure that, people are who they say they are, and then doing a full credit check and properly assessing the right rate that people should be getting. Yep, right here.
What is it that you do, I guess, operationally or whatever, to try and actually make more margin than, let's say, a bank or a Visa? Like, what are you saving then, I guess, that you can charge a lower rate?
Yeah, so the question is, how can we charge a lower rate? I mean, there's a number of things that we a cost that we do avoid. I mean, a huge branch network would be one. So obviously, big branches have lots of networks, lots of employees. There are, things like deposit insurance that, we're not a bank because we're not taking deposits in that we're then holding and lending out. We're doing a straight pass-through. So there's a number of things that way on the regulatory side as well that are different about us. I mean, we're very focused on sort of doing one thing and doing that well. And so I think that's part of it as well.
Thanks.
And really using technology. Okay, thanks very much, everyone.